Years ago, I watched my mother lose her job after developing carpal tunnel syndrome from repetitive data entry work, and she later had surgery and was let go. And that moment really stuck with me. I remember thinking, there has to be a better way. That's what inspired me to create Connex, a tool that automates e-commerce operations and helps businesses eliminate the kind of tedious, manual work that burns people out. That's why I'm so excited to welcome today's guest. Kelly Zack is an expert in state and local tax with deep experience in helping e-commerce businesses navigate the ever-changing landscape of sales tax compliance. From nexus laws to marketplace facilitator rules, Kelly understands the complexities that can overwhelm sellers and, more importantly, how to simplify them. She works with companies to ensure that they stay compliant, avoid costly mistakes, and free up more time to focus on growth. In this episode, we'll talk about why sales tax compliance has become such a critical issue for e-commerce businesses, the biggest misconceptions sellers have about state and local tax obligations, how small businesses can streamline compliance without drowning in spreadsheets, and what the future of e-commerce sales tax looks like in the age of automation and AI. If you've ever felt confused or overwhelmed by sales tax rules, this conversation will give you the clarity and actionable next steps. So Kelly, my first question, how did you get involved in state and local tax, and what drew you to working with e-commerce businesses specifically?
Well, I started out as a corporate tax kind of a generalist, and my first few jobs were working on both federal and state, mainly corporate income tax. For large multinational companies. But I was always drawn to state taxes because I loved the fact that every state was different. Every state had its own rules. I liked the complexity and the nuances in that respect. And I always thought SALT was such a cool acronym. So it kind of made a tax nerd have a more cool approach to the world. But when I started building the SALT practice here at AAF CPAs, I really started focusing a lot more on sales tax. We found a lot of our existing clients hadn't really addressed their sales tax issues. It's across the board. All our clients had some kind of sales tax issues, whether it was nonprofits or manufacturing, high tech. But it's especially impactful, as you mentioned, Joe, for e-commerce companies, because you can literally sell to anywhere in the world, and you have to know what that impact is going to be on your business.
And what kind of impact could state and local tax have? Let's say a company just doesn't track it very well. Could they get audited? What would happen?
Yeah, so you never know what is going to prompt a state to call you up for an audit. It could be, your customers are being audited and they see you. Or they could just say, we're going to now start looking at more e-commerce businesses. So they are always going to look at where you're selling, how you're selling, what are your products, and how much are you selling into my state. And I know we're going to get into that with some more, specific questions about nexus and taxability. So you always have to assume the worst and be prepared. And that's what we do for our clients is just, you never know what state is going to come knocking next. So we want our clients to always be prepared in case they do.
And what are the most common misconceptions e-commerce sellers have about sales tax compliance? Is sales tax the same? Like in Massachusetts, it's usually 6.25%, but does sales tax change by state or county by county?
Yep, absolutely. I think one of the biggest misconceptions is I don't have a store in your state. I'm an e-commerce. I sell products over the internet. I don't have a store in Arizona, so Arizona can't possibly subject me to sales tax, and that's absolutely not true. The new concept of economic nexus, which I know we'll talk about in some future discussion. The concept of economic nexus says it doesn't matter whether or not you have a physical presence in a state. If you're selling a certain dollar value threshold or you have a certain number of transactions, then those states can subject you to sales tax. Another misconception is if I sell through a marketplace like Amazon or Etsy, a misconception is, well, they'll take care of all the sales tax, that I can wipe my hands of that. So even though marketplace facilitators, as they're called, will generally be responsible for collecting and remitting tax, and you'll all see that when you buy anything on Amazon, right? But you as the seller may still have obligations to register for sales tax in that state. You might have to still report those sales on a sales tax return to the state. You'd back them out. You wouldn't have to pay the tax, but you might still be required to report those sales. Another misconception is my product isn't taxable. So that's where the real fun part comes in, is that every state can define your product differently. It can categorize your product differently. So you really have to know each state's rules as to what they're calling your product. And then one final thing is, if I'm using software like Shopify or whatever software I'm using, my software is going to take care of all that. I don't have to think about it. And that is rarely the case. You as the seller really still have to monitor where you're selling, how you're selling, and what you're selling. Make sure you configure your software, your whatever system you're using. You have to configure it properly to make sure the tax is taken care of in the correct way.
So even though I don't have a physical office in Arizona, if I'm selling products there, you're saying that I may have to pay some sales tax?
You may be, when you reach a certain level, it's called economic nexus. For the most part, states that have a sales tax regime, assume $100,000 in sales. Some states are actually higher than that. Once you sell $100,000 worth of your product to customers in Arizona, for example, then Arizona is going to say, okay, now from this point forward, you have to start collecting tax on all your future sales to Arizona customers. You have to register, you have to collect the tax, and then you have to file monthly or quarterly tax returns. So even though you have no physical presence, you have no employees in the state, you have no brick and mortar, you still, once you reach those thresholds, you still have an obligation.
So even if you make a certain amount of sales, I'll say $100,000 to Arizona, your e-commerce business, they consider it like nationwide. So you may, I think it was, what was a support case? Wayfair versus South Dakota.
Yes,
yeah,
indeed.
And that was tell me, remind me of that case again. It was about Nexus.
Yeah, so it was a Supreme Court decision back in 2018. And, as the landscape of selling changed and there were more and more e-commerce businesses, the states were realizing, hey, wait a minute, we're missing out on tax dollars here. These sellers are enjoying our marketplace. They're enjoying the benefits of selling to Arizona and Illinois, but we're not getting any sales tax dollars from them. Wayfair, it was a case that was brought to the Supreme Court, and the decision says once you reach a certain dollar threshold of sales, regardless of physical presence, the states are allowed to subject you to sales tax, subject your transactions to sales tax. So it was really far, far reaching. And then all the states took a few years, but now all the states that do have sales tax have some sort of economic nexus provisions.
That's very interesting and good to know. What kind of challenges do you see e-commerce businesses facing when it comes to keeping up with different state and local requirements like tax-free holidays?
Right. So it is difficult to keep track of. The first and most important thing for e-commerce sellers is to keep track of your sales by state. Generally, you'll be able to run some kind of report, see some kind of report through whatever system you use that says, here's all my sales for the month of October, and these are where the customers are located. And you monitor that on a monthly, at least quarterly basis, and keep track, am I about to reach the threshold in those states? Again, almost all the states are 100,000. There are a handful that are higher. New York is 500. I think Tennessee is 500. So it's really imperative to keep track of your sales on a regular basis by state. And once you hit those thresholds, then you have to register and collect the tax. So that's really important. The other thing is, back to my prior comment, is knowing, is your product taxable? So when you sell a widget, any kind of a computer mouse, pens and pencils, those are always going to be subject to sales tax. The things that are more tricky are certainly digital products, so you're selling online learning or online, streaming products. You might be selling medical products, and each state defines medical devices and medical products differently. So you really have to really be comfortable what you're selling, know all the ins and outs of your products and your services. And then it's a matter of determining how each state is going to tax them. So that's imperative. That's what I always tell, practitioners or, my clients, know your product and know what you're selling. And also
the taxes change depending on what you're selling, where you're selling it. So a pair of shoes may have a different tax rate than a digital product like a Spotify, for instance.
Right. The tax rates are often consistent among the products. There are a few exceptions, like Illinois is one that's jumping to mind, where they have a different tax rate for medical devices and prescription drugs and things like that. But the bigger thing, to your point, is most states have, in addition to a statewide sales tax rate, they also have local rates. There can be a city rate, county rate, district rate. So all of that is driven by the zip code of your customer. So that's imperative too, not just to know the state, but the actual zip code, because Colorado is one crazy state that you can be on the different sides of the same street and there could be a different tax rate. So really that gets really complex and hard to maintain when you're talking about tax rates. So that's really something really important. One other thing I wanted to mention too, not only knowing what you're selling, where you have nexus, but it's also really important to know who your customers are. If you're selling to hospitals, nonprofits, government agencies, oftentimes those types of customers are exempt from sales tax. So you need to know that level of detail as well. And you would need to get the proper documentation from these customers to say, okay, we're not charging sales tax to this particular customer because they've provided us with the certificate saying that they're not subject to tax. So that's another really important thing to monitor, is not only what you're selling, where you're selling, but also to whom you're selling.
And speaking of monitoring all these marketplaces, how do sellers on Amazon, Shopify, BigCommerce, how do these marketplace facilitator rules impact tax obligations? My company syncs Amazon sales, and we frequently get marketplace facilitator tax principal, facilitator shipping, and we actually remove that from the order. Do Shopify and BigCommerce, do they have that too, where they collect the tax for you and then they remit it? Or how does all that work?
Yes. So again, it took some time for all the sales tax states to kind of jump on board with marketplace facilitator rules. When it first came out, it wasn't across the board. Now, I think I can definitively say all the states that have sales tax have some kind of marketplace facilitator rules. So basically that's what happens. The marketplace facilitator, whether it's Amazon or Etsy or whatnot, is responsible for collecting the tax on the transaction and for remitting it to the state. But as I mentioned before, that doesn't take all the responsibility off the seller. There are states that still require the seller to get registered in the state. They may have to report those sales on a sales tax return and then back them out to show that the marketplace facilitator has already collected the tax on these. It's really all a way for the states to keep track of who is selling into their state. They're constantly trying to catch taxpayers not paying the right tax or not remitting the right tax. So yes, the marketplace facilitators will collect and remit the tax, but don't think that takes away all your obligations. You still may have to do some compliance on your own end for those.
It's good to know about the facilitator that even though they're taking away the tax, you still have to do some work.
Right.
So for smaller businesses, I'm sure compliance can feel overwhelming. What tools or strategies do you recommend to simplify the process?
Yeah, it definitely can be. If we're talking, there are 45 states that have sales tax. There's 5 that don't, but the rest of the 45 have a sales tax obligation of some sort. Well, first and foremost, going to be a broken record, always monitor your sales by state and be able to, at a moment's notice, run a report that says, what have we sold year to date by state, and then trying to automate as much as possible. Whether you can have some kind of a tracker that says once we hit $100,000 in 2025, for example, once we hit 100 in Arizona, notify me, and then we know that we have to start the registration process. So automate as much as possible, but always the caveat is you can automate to a certain extent, but there is still the human interaction that's required to really keep track of what you're selling, where you're selling. The other really important thing is to maintain exempt certificates. Again, there's going to be times where sales tax is not due on a certain transaction. If it's a taxable sale, you're selling something that is subject to sales tax in a state, but you have not collected sales tax, you need to keep a piece of paper, or digital version of a piece of paper as to why. Is it selling to an exempt entity like a government agency? Is it because your buyer is reselling their product? You could be selling things that a buyer is going to resell. The tax won't be due until the actual end user. So you would have, again, a piece of paper saying why you're not charging.
They upload an exemption certificate to the software company, and that way they know that these transactions are tax exempt, and that's good to know for like nonprofit, government entities that they're not charging tax.
Yep.
And so how can businesses avoid the burnout that comes with manual tax reporting? I mean, a lot of my customers, they'll go into, QuickBooks and they'll track codes, but they're just applying one flat rate for the state, or
right.
I have some customers that just apply one rate for like a county and that's it. I'm like, so are all your sales just in this county? So they have weird tax mechanisms.
Yeah. So we have a lot of clients that use QuickBooks, and I'm actually going through this with one particular client. They're setting up for the first time. They're a brand new company. They're actually selling a type of medical product, medical supply device. And that's what we're going through right now in QuickBooks. How do we categorize our product within QuickBooks? And I'm only going to say QuickBooks because I'm in that right now. Other systems can do the same thing. The really key thing is make sure your product is categorized correctly. And I would also always recommend running some trials. If your tax advisor says your product is taxable in Arizona, and however you set it up in QuickBooks, it's coming out exempt, really dig into how have you defined your product and how have you categorized it. Once you say to QuickBooks, my product is categorized under your code XYZ, and QuickBooks should have, depending on the version and the detail you have, QuickBooks should then be able to apply that state's sales tax rules to that category and determine, first of all, is it taxable or not? But QuickBooks and any other system should also be able to look at the zip code of that customer and know the total tax rate that should be applied. So it should be, to your point, the state, local, city, whatever, all driven off the zip code. Setting it up initially is crucial to make sure you've covered all those bases that you
I know
have.
QuickBooks Online,
Yep.
I think maybe they have that feature, but I know Enterprise does not unless you have a third-party plugin.
Right, exactly. So QBO is the one I'm working on now, and a lot of the clients I've been working with have QBO. But if they don't, sometimes I get calls twice a day if my client is maybe just only invoicing once or twice a month. Then it's easy for them to say, okay, what tax rate should I charge? But for clients, all the e-commerce businesses, you can't be calling up your tax advisor every time you issue an invoice. You have to make sure, again, categorize your product correctly and make sure that your product is linked to some database of tax rates that will cover all of the taxes due, not just the state rate. It's obviously crucial to have the city, county, local tax rates included as well.
Good to know. And what mistakes do you see that end up costing sellers the most, either in penalties or missed opportunities?
This is kind of a side issue, but I always want to bring this up, is use tax. So when let's talk about a company based in Massachusetts. I'm sitting here in Massachusetts, and you're buying computer equipment for your office, you're buying furniture, and for whatever reason, your vendors aren't charging you sales tax. They may have valid reasons for not, they aren't registered in your state or whatnot. When an auditor comes in, the first thing an auditor looks at is use tax. They would print out all your fixed asset purchases for the year and you'd have to prove to them that sales tax was paid, and if it wasn't, they're going to charge you what they call use tax, which is just this. It's the same as sales tax, but it means that the obligation is transferred to you as the buyer. So keep your eyes on your fixed asset purchases, software purchases, computer equipment, and when your accounts payable department should flag any invoices like that don't have sales tax on them, and bring that to your attention, and that the tax on those purchases should be paid over to the state. So that's one really important thing to know. Understanding what category your product is. And I know I'll sound like a broken record, but we talk about that over and over and over again with our clients. And digital products can be really tricky. If you sell software as a service, what are the states? All the states have different rules about software as a service. Is it custom software, prepackaged software? Are you categorizing what you're selling as computer services versus software? So again, all the states' rules are so specific. Any medical devices, pharmaceuticals, any kind of category like that, you have to you really have to know what you're selling, but more importantly, you have to know how the states are categorizing you.
Because based on your category, you have the right to tax. So it's based on category, the zip code, rooftop location of where you're selling something.
Correct. Yeah.
And looking ahead, how do you see that automation and AI are reshaping the future of e-commerce sales tax compliance?
Yeah, that's also the fun part. What I always say is I want to switch people from a reactive mindset to a proactive mindset, and a proactive, intelligent process. You'd never want to think about sales tax for the first time because you got a notice from a state. And then you have to scramble and, think about, shoot, I'm going to have this tax exposure. There's going to be interest and penalties. So being proactive is crucial. And getting to the issues and getting to the risk before a state actually knows you even exist. So, we help our clients with real-time location-based tax calculation. We actually look at bots that can handle compliance automatically. We are constantly looking at AI for flagging potential audit risks, running reports that show fixed asset purchases with no sales tax charged. We here at AFCPAs, I'm working with our IT department to develop what they're calling a co-pilot agent. And we're kind of filling this database with research tools and previous emails that I've written to clients with code sections and state regulations attached to it. And we're building a co-pilot engine so that if a client has the same question that another client had, we can access the answer through this co-pilot engine. So bots are hugely important, especially if you're an e-commerce company with a ton of data, a ton of sales activity. Use of bots is crucial. And I sound like I know what I'm talking about. I rely heavily on our IT department, and they love this kind of stuff. So we're constantly, as a firm, looking at AI, but using it intelligently so our clients can be proactive. And it's always, I sometimes feel like I'm the bearer of bad news, and we tell our clients, I always start with the worst case scenario. Based on the data you've given me, the information I have about you and your company, this is the worst case. These are the 25 states that have the right to potentially come in and subject you to tax. But I think where our value is we say, okay, that's worst case. But now let's whittle down and look at where is your biggest exposure? Where do you absolutely, maybe even have employees? If you have an employee, a remote employee sitting in a state, guess what? That's physical presence.
At my last job about 20 years ago, and my first full-time job out of school, I worked at a software company, and they had remote employees in different states, and one in Tennessee, and they had to register for sales tax in Tennessee because I had an employee there.
Yes. And, since COVID, that's become much more prevalent, right? We have clients with employees all over the country, and they're saying, you know what, we have work from anywhere, but once you have an employee in a state, you're obligated in that state to have the withholding, right? The payroll tax withholding, unemployment. And right away, that is a touch point with the state. So the state is going to say, hey, wait a minute, we got this W-2 from ecommerce.com, XYZ company. But wait a minute, I don't see any sales tax returns for this company. I don't see income tax returns. So once you have an employee in a state, really crucially important to let your tax advisors know, because a whole slew of state tax obligations can result from that. And, it just makes you much more visible to the state. So those are the states. If you have, you've reached the threshold and you have an employee in the state and you're continuing to sell a lot of product into that state, those are the states that go to the top of the risk list, the highest exposure. The states where maybe your product isn't taxable, you're selling something that, New Hampshire, no, that's a bad example. They don't have sales tax. That Rhode Island says is not subject to sales tax. So maybe that state goes to the bottom of the list.
Does Florida have sales tax too? I know. Are they one of the 5 states?
No, it's actually, we have another weird acronym because we're a bunch of nerds. It's the NOMAD. So it's New Hampshire, Oregon, Montana, Alaska, and Delaware. The 5 states that do not have a statewide sales tax system. So obviously if there's no sales tax, you definitely don't have to worry. But if you have a state that you've reached that $100,000, but your product isn't subject to tax in that state. So technically you're supposed to register and you'd be filing a bunch of zero returns. I tell my clients, that's not worth your time. It's not worth it for you to pay anyone to file zero returns. It's just not worth it. You'd be better off having the state send you a notice. You tell them, fine, our sales are not subject to tax. So the exposure for those states is really low. So that's, I think, another important value we can bring to our e-commerce clients is let's really look at it from a management perspective and see where's my biggest exposure and save me some tax dollars right out of the gate rather than, trying to dot every I and cross every T, which is so hard with all these states involved.
And my last question for today, if you could give e-commerce sellers one piece of advice to improve their sales tax compliance overnight, what would it be?
It's the things I've talked about before. Know your product, track your sales, but also keep your exposure and risk profile at top of mind. Think about it. And I know this is more than one piece of advice, but we also look to what is your exit strategy for your company? Maybe at some point you're going to be thinking about selling your company down the road. You have to make sure your company is covered for all your state tax obligations, because during due diligence, the buyer is going to be looking at that. And I've gone through a lot of those transactions at AAF where the buyer comes in and says, wait a minute, why aren't you filing sales tax returns in all these states? Why aren't you filing income tax returns in all these states? And then it becomes a push and pull. And sometimes the buyers will hold back money from the sales price, or they may walk away. So even if you're a new company, even if you're starting out, but you want to prepare for that eventuality of when you want to exit. I want my books and records to be clean. I want to be tax compliant so that the buyer is going to come in, ask these questions, and you're going to be able to give them you're going to be able to tell them, yep, we're good. We have consulted our tax advisors and we're filing everywhere we're supposed to be. The risk profile has been addressed. Not to say you should always be thinking about a way out, but the cleaner you are at that point, the better for you and for your shareholders.
Yeah, knowing what states where you have nexus, knowing if your product is taxable, and making sure you're keeping track of that system.
Exactly. And just knowing, because this, again, there's so many rules and each state is so different, focusing on the states with the highest risk and the highest tax exposure, because it doesn't, if I'm coming to a client proposing on an engagement, I'm not going to suggest this huge widespread registration and filing 1 million tax returns every month, which can build up fees if it's not worthwhile to our clients. And I think that really resonates with taxpayers, because you can't be fully 100% compliant. So let's really focus on where you get the most bang for your buck. So,
well, Kelly, thank you for your very interesting discussion about sales tax and e-commerce. I want to give you a big thanks for breaking down such complicated but critical topic for e-commerce businesses managing their tax across different states. And if you're ready to simplify your sales tax compliance and avoid costly mistakes, be sure to connect with Kelly on LinkedIn at linkedin.com/in/Kelly-Zack, Z-A-C-K. And if you want to ditch manual data entry and automate your e-commerce operations, head over to ConnexEcommerce.com. Don't forget to subscribe, leave a review, and share the episode. See you later, Kelly.
See you later. Thanks so much.